Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, the 12th of October, 2021 and 6:15 p.m. Well, unfortunately, the Chicago White Sox lost. It's okay. They got into the playoffs. I congratulate Houston. Now at least I can go on to watching football, basketball, and hockey. And I love basketball, so it's one of my favorite games. But this was fun to see, and I'd never been to a playoff game. If you've never gone to one, you got to go. I have been the Michael Jordan era of basketball. You couldn't get tickets. I had tickets, and you'd go, and the crowds, the walking, the pretty people, it was insanity, and the screaming. This was a little different and not as, I think this doesn't even, I don't know if it handles as many. I think outdoors it got more people, but remember, there's no dome on it. I couldn't hear myself. All right, maybe that's a good thing. So as we look at the marketplace, let me tell you where I think the battleground is right now. It's the word inflation. Transitory, not transitory. Real, yep. Is it going to last? Don't know. I don't think energy prices are coming down anytime soon in a monster way. That's because of all the pent-up demand. It would take the gratitude of OPEC Plus to do it, and I'm sure you think they're your good friend, and they're going to say, no, that's hurting people. We don't want to put economies in trouble. We'll drop it $20 a barrel. We got to help you guys out. Sure, they're going to do that. And we've put ourselves in this own position. Did you see today what China did first thing in the morning? They told their coal producers to go all out and double production, the dam with green, and everything else. They need the fuel for energy. So it's beautiful to want to go green, and I want to save the planet in the proper stages. I mentioned this yesterday. We should have done a lot of things 20 years ago, and we didn't. Al Gore had it right. Most of us did not. That's, by the way, give the man credit for that. He saw it coming, and he was the one that really saw it. I thought he was nuts. Give him credit. Give me none. So when you look at all that and you say, well, isn't there a better way than just stopping? Today I'm reading what the little independents are doing. The independents are out there opening wells left and right, and they're doing it in all parts of the country, and they'll have more wells than the big boys. You start watching U.S. production numbers. If I'm wrong, I'll eat crow. I don't think I'm wrong. It's the big boys that owe it to their shareholders to make them whole, get the balance sheet down. If I'm an independent, I don't owe diddly to anybody other than the few guys backing me, and I'll control them. That's how it really works. I love Dallas. Remember that old thing? J.R. Ewing had it right. Okay, so we watch what this is all doing. We take it from there. You see how the market's slipping away. And that's because the stock market's fighting the scenario where J.P. Morgan, Bank of America, Goldman Sachs, all the banks are wondering, do we have to alter the 60-40 portfolios that most people have? 60% stock. Maybe this is wrong. Maybe this inflation, the Fed's got it wrong. It isn't transitory. It's really sticky. I wonder. So you're now fighting that battle left and right. You can see how the markets come down here today. Today, Quarles came, was it Quarles? No, Clarita. Mr. Clarita came out today, Fed Vice Chair, and he thinks inflation is still in many parts not sticky. I agree with that. The question is what parts are sticky, and I'm fearful energy is very sticky. But when you look at this market, it's starting to give up things. The trend is still up if you're on the swing line with higher lows, higher highs. The market's fighting a battle, and it lost it today. And I'm fearful that you're going to get the 18-day average under the 100, and you're going to get another wave to the downside if that occurs. Prepping you for that, okay? Keep your eyes on this. If you look at where the Bollinger Bands are, if I'm right and you let go, you go back maybe to 42.76. Not the end of the earth, but still a sizable break from here. It's another 50 points. If you take a look at momentum, it's down. So you have momentum down, bias down, but the swing line up. And the potential for a bearish crossover where the 100-day average gets under the where the 18-day average gets under the 100-day average. That would not be pretty on the chart. In the NASDAQ, We still have markets that are looking, and remember, we did not hold the other day. That's right here. This is where the market had to start holding, and this was yesterday. It didn't, and that could have let the market down also over here. We're not in a trend in the NASDAQ. You have a lower and low, higher high, so that's a fight. But what else? Look at that. They could start crossing to the bear side. More bear action. You had the bear action in the Dow. You broke right after it. You came back up, and I get it, but we'll see if it wants to do. This doesn't have that new bearish type action that the others could develop, and you're in the middle of, I don't know what, in the Russell. All these moving averages came together, and you're just bouncing around them. It's not an easy call, because even the markets that break down in the S&P and the NASDAQ are not yet in downtrends. They could fall rather hard and not enter that period. When we go to the VIX, your story is if you rally from here, and remember, you're finding support at the 100-day average and the 200, look for resistance at the 18-day average of closes. The market is working itself. It's still in it, an oversold condition. So I don't think you're going to get in any manner where the bears want to support that 18-day average very much in an oversold way. When we look at the T-bond market, are you going to lose the embedded reading? Well, as of the close on Tuesday, today, you had it. If you lose it, you're probably going back to the 18-day average of closes. That's a good place to get your ammunition ready. If the market gets a settlement tomorrow, anything over 21, you don't want to be short anymore. In the 10-year note, it's not the same game. This is still in the bear mode. It still has the patterns that are right, the lower highs, lower lows, and embedded. Until it's lost, I'm still looking potentially for the 130.15 area. In the dollar index, this had the most interesting of charts. I love when these things happen. You get a market that loses the embedded reading, and in theory, my theory at least, it should get back to the 18-day average of closes. But you have another thing, an event that happened. You have an outside day down. That doesn't scare me off in any manner of thinking what I did unless the high of Friday is taken out. That be it on Monday or Tuesday, today. The market yesterday goes and takes it out. What that does is that negates this action for the moment. Now a new play is in there. My rule is that when you have an outside day down, if you take out that day's high within the next two trading sessions, the odds favor the market's going to move up to the closest major moving average or Bollinger Band, the closest of the two. All the major averages are under the market, so we're dealing in this case with the upper Bollinger Band, and this is where you're at, and you haven't opened yet tonight, but it wouldn't surprise me if you make that run. This no longer is the game. That's done with because of what happened taking that out. It all has to restart again. The euro, the game is still on. It is still feeling all the pressure of the dollar that's not embedded but moving higher, and this still has the embedded bearish reading. Doesn't want to finish it off and get back under the 115 level. Think of that. Everybody that went to Europe, and I thought they had a great deal here, now look at how much cheaper. Darn it. Then you go to the British pound, and there's a huge battle with traders trying to think that the Bank of England, employment numbers today, by the way, were stellar in the UK. 207,000 new jobs there. That's the biggest one-month gain I think I read since 2014. The bank is under pressure to raise interest rates, and the market thinks if they do so, it'll be a calamity, the wrong thing for their economy. In addition, they're fighting like mad now with the European Union over the Irish borders and how everything gets put into the country, the holdbacks. It's getting really ugly. Bitcoin, as long as you have an embedded reading, I think these breaks get bought and the traders look for the market to go up. In the Brent versus WTI, this is the first serious break. Let's come here. This was yesterday. Today, WTI got much stronger. The difference is narrowing in, as you can see, to the Brent. In the Brent, we still have the embedded reading. Nothing has changed. Get the red number here, the slow stochastic, the K line as it's called, closing under 79. I'll change my opinion in the short term. WTI, same thing. I remain bullish. This is a resistance area. I realize it. We'll see what the market wants to do with it in terms of does it want to lose the embedded reading or hold it. But as long as it's embedded, I don't care about anything else. I think the pros buy it till it's no good. Heating oil, same thing. I've got two SLOs. I'll get rid of one of those. Higher lows, higher highs, embedded. Until that's lost, folks, I think the pros are buying on these breaks, and they're kicking out on these rallies, cutting their positions down and keep adding to it. I don't think the game ended in their eyes. And in the nat gas, what a washout day. Look at today's range. I watched this and my jaw dropped as it came back. It got to 533.20 and closed near the day's high. What the heck is that all about? Tonight is just sort of hanging there. So we had a trend that we actually have a trend that is down. The market's fighting for the bias and momentum is still down. Why is this taking place? Well, let me think. It's 74 degrees in Chicago. We should be 50s, 60s, not 70s. It's finally going to start cooling off. And as we're warm, other parts of the country are experiencing the same thing. The good news, and I want to repeat it, I'm hearing lots of snow falling in the Rockies. Utah had a massive amount of snow. You need to replenish the snowpacks. If we replenish the snowpacks, water will go down into the valleys of California, which is sorely needed. Keep your fingers crossed and hope that Mother Nature comes along. Now, remember, my morning video, my subscriber videos, they're all now on the front page of our website. You don't have to go searching any longer. Just go to www.iraepstein.com. For those of you that are paid subscribers, when you click on, be it the morning subscriber video, and it's big right there, or the ETF, they should play. If they don't, go up to the right-hand top where it says Member Login. Click that on because you cleared your cache and your user ID and password aren't in there. Put them in. You can go right back. It'll work until you clear them out again. Again, I cover every morning the details of the market. I start you off with what reports are coming out in America and what has taken place in reports in Asia and Europe. I cover all these markets, and there'll be a scroll bar on our chart right here. And on that chart, just pull. If you want to go to metals, you're there. Pull all the way to energies. It's lighting up in big letters. Let go. You're right where you want to be. It's time saving. It gets you where you want to be because you can then say, there's a setup that he likes. Okay, I think I like that too. Oh, he's bullish. I'm bearish. I don't think he's right. I'll go with mine. Whatever the case may be. The idea there is a way to bounce this all off quickly, get it done for you. How do you do this? Well, you got to be a paid subscriber. You can see all of the YouTube videos for free. They're now on the web page too, right in front of you. $7.95 though for the first 30 days for my paid subscriber videos. ETFs are $8.95. Give it a try. Go to www.iraepstein.com, and to register, just go to the very top on our free offers. Look on the top and the left now. That's where free offers are. I'm Ira. Take care.